Hello everyone, today I am joined by Sara Awad, Junior Analyst of TechStock Pros. Thank you so much for joining me today, Sara. And today we will talk about Nvidia headed into earnings. Sara has a lot of interesting research that she'd like to share, and I will break down my thoughts headed into Nvidia earnings. And both of us are pretty bearish, I would say. We've talked behind the scenes already. First, why don't you tell us a little bit about you and TechStock Pros?
Definitely. Thanks for having us, Navid. So essentially, I'm joining from TechStock Pros, where we run an investing group called Tech Trades. And essentially, we have two profiles, a public site, and then the investing group that kind of has our live portfolio, our earning updates, and a lot more features that we'll get into later in the video. And our goal is really, we're a small team, and we're industry first kind of analyst, and so we break down the market from a fundamental point of view, which is all the more necessary now after the AI boom, with so much market noise to filter through and a lot of headlines that are based on hype and not really on fundamentals. So our goal really with TechStock Pros is to kind of level the playing field for the retail investor, because institutional guys have such an advantage with the kind of access to research and analysis that they get. So that's a quick overview about us. We're led by two senior analysts, one on the software hardware side and one on the semiconductor side. And combined, they have over 50 years of experience in the field. So I'm pretty confident about our thoughts on Nvidia heading into print.
That's great to hear. I like the confidence. So what are your thoughts headed into earnings?
So we're pretty bearish on Nvidia, and there's a lot to unpack there. Nvidia is a market mover, and everyone is pretty bullish going into print. Maybe not as bullish as they were last quarter, and I think that's because with the July sell-off that happened, a lot of these sell-side guys think that the weakness or the downside or the risk of the product transition from the H100 to the Blackwell series has already been priced in because of that pullback. But we don't think that's true yet. We think the real weakness is going to be priced in when management confirms it, and we expect that we're going to see something along those lines happen on the call on Wednesday. So we think that either we're going to see a softer October quarter, because Nvidia isn't priced like other companies, right? Like Nvidia is priced to beat and raise guidance substantially. The stock is trading at a multiple of 37 forward earnings compared to the average of 29 across the top 6 tech companies on the benchmark. So Nvidia's valuation and the expectations for Nvidia heading into print are extremely high, and we don't think that they're accounting for the risk of the product transition or really accounting for how Nvidia could perform in terms of sales and guidance from a fundamental perspective. So we actually downgraded Nvidia in early July before that whole sell-off happened. And then after our downgrade, Nvidia dropped down up to 27%. And then bounced back, so we downgraded around $135 per share, and then it dropped down to 98, and then now it's back up at around 125. So a lot of these guys think that that pullback was basically the downside or the negatives being factored in. The stock is now de-risked heading into print, but we don't think that's true. We think Jensen's commentary on the call and the guidance for October quarter really is going to tell us everything that we need. And considering that Nvidia is the market mover, a pullback from Nvidia or even a slightly softer guidance in comparison to consensus could really cause the stock to pull back. So that's essentially our thesis heading into print, and I'm excited to kind of unpack that with you on the call and explain to the audience why that's our thoughts.
Okay, so do you think Nvidia's price to earnings ratio is too high?
I think it's too high considering the near-term challenges that the product transition presents. So there's really two things to unpack here, Navid. The first one is looking at lead times for the H100. So lead times for the H100 were up to a year last year, right? And then in January, they were down to 36 to 40 weeks. And then in April, they were down lower to around 12 weeks. And now the lead times are relatively non-existent. And so we took a look at Nvidia's data center sales against the AI server revenues from players like Supermicro, Dell, HPE, Lenovo, Inspur, and a couple other companies. And what we found was that actually Nvidia's data center sales were actually higher than the combined revenue of all these players in terms of AI server sales. And so the discrepancy between those two tells us that there's a lot of double ordering that happened. over the past 4 quarters. So we ran the number over the past 4 quarters for Nvidia data center sales against AI server sales of these companies. So as I said, Supermicro, Dell, Lenovo, HPE, Inspur, Westron, and a couple others. And that discrepancy between the sales of Nvidia and the sales of these companies tells us there's a lot of double ordering. And double ordering happens more often than not when there's a shortage. So it's basically a rule in the semis where there's a shortage, you're gonna see double ordering. So considering that there's no more lead times, i.e. there's no more shortage, we think that that double ordering is going to pull back and we're not going to see it reflected on NVIDIA sales. That causes a potential higher risk for an air pocket for NVIDIA into print this quarter. We think that the company is very well positioned to actually beat guidance for the quarter, but we don't think that we're not as confident about the October quarter outlook or the commentary confidence of management on that call.
Okay, and are you factoring in really what the Fed is doing and the economic situation, just kind of slowing down the economy right now? So is that the thought process behind, revenue starting to shrink for a top company like Nvidia?
So I think that definitely does play a part, but when we're looking at Nvidia, we kind of tackle Nvidia from a more fundamental engineering perspective, kind of looking at the products and understanding the buying and selling behavior of customers in that field. So we're talking about Supermicro, Dell, and all these guys and the inventory that they're sitting on. So tying back into the point about the lead times, so essentially you have these very long lead times. Customers have to place an order to get something several weeks later. And then with these lead times shrinking, customers don't need to place an order that early ahead. So less people are ordering, less people are double ordering. So that's factor one in looking at NVIDIA into print on Wednesday. Factor two is that with the product transition that NVIDIA is leading from H100 to the Blackwell series, we think there's also a risk that customers aren't going to place as many orders for the H100 because it's not going to be as competitive down the road when the next generation is out. Right, so why would you buy a product that's going to be less competitive when your competition is going to have the newer generation product that is superior in terms of performance? Right, so we think that could cause a bit of an air pocket for the guidance for the October quarter. And then adding on that is also kind of unpacking that product transition and what comes with it. A lot of the analysis on NVIDIA kind of pitches or presents this product transition as if it's like a simple one-step transition. This is actually, from a fundamental engineering perspective, it's a two-step transition. The Blackwell series is going to require liquid cooling, which will come with a lot more issues. So it's not just like plugging something out and plugging it in. You're kind of changing up the entire setup, and you've got to get in this liquid cooling, and you've got to kind of rethink the structure of your server to be able to operate at this next generation level.
I mean, I've seen some headlines about the Blackwell chip being delayed. So, I mean, that sounds like it's going to make things even worse, in addition to all the factors that you're talking about. Now, I do want to add in two factors that I'm seeing that I'm concerned about. So I think this is very, very interesting. So the CHIPS Act is really providing an unequal distribution of funding to across many different companies. And the companies in the yellow are classified as leading edge chip products, and they're receiving most of the funding here, so roughly 10 times more than the other companies here. And we can see that surprisingly Intel is receiving a lot of money. I've always thought Intel is really suffering. Micron is up there, so I'm really interested in seeing if some of these companies start to really benefit from the CHIPS Act over here. So I think this is something important to keep an eye on as far as where the funding is flowing and what these companies do with the funding, whether they can convert that into some type of rally for their stocks. The other factor that I think is important is the presidential election, because if Trump were to win, I think a lot of people are already pricing in a Trump victory. I think there's a long process to go. But if he does win, he has a very negative stance towards the Taiwanese chips makers. So he wants to bring jobs back to America. He wants these sectors to be booming in the United States, not in Taiwan. So I think that will completely disrupt the whole industry of as far as what's taking place. So I think these are the two factors that I'm personally monitoring from a government and political perspective, as far as that they can affect the industry. Now,
Actually, touching on that really quick, so we've been looking at what we could call the chip wars, and there's a great book out about that specifically, the chip wars between the US and China, and like the history that goes back all the way to the beginning of the chip industry. Yeah, it'd be great if you pull it up. Yeah, it's a great book. I would recommend it for a good read. And essentially, over the past couple of years, there's been a lot of talk about this chip war between the US and China. And there's a lot of people who are scared about investing in companies like TSMC, although they're very well positioned, especially in this AI boom. And if you want to pull up their chart as well, I think that would be a good visual representation of how well they're doing with the AI tailwind, in spite of the pullback on and demand on PCs and smartphones, which they're also very exposed to. And so people are being afraid to invest in TSMC because of this fear that China is going to invade Taiwan. And we don't think that this is something that's likely to happen over the next 1 to 2 years. So we think that's a lot of also market noise that we like to help our audience sift through. Because essentially the US and the Trump's comments about, for example, making Taiwan pay for US defense to protect the island, we don't think that those actually have a fundamental basis. We don't think they're very likely to happen. Because at the end of the day, if you look at the distribution of revenue geographically for TSMC, China's a big benefactor from TSMC in terms of chip making, so is the US. And with the CHIP Act and this whole entire effort to move chip making to US soil, they're going to need TSMC in that process. And already TSMC is a big part of this process, right? They have this down to the dot. They've been doing this longer than anyone else has, and they've been doing this more successfully than anyone else has. Definitely more successful than global foundries if you compare both stocks during industry downtrends and also in terms of their positioning. So we think as AI moves to smaller nanometer nodes, and with the smartphone and market demand recovering next year as the economy kind of recovers, hopefully with the Fed introducing a more favorable interest rate environment in September, we think that TSMC could be a real winner in 2025 because they have the AI tailwind working in their benefit, and then they also have end demand from other markets, other core markets rebounding. So we think that the CHIPS Act and the CHIPS wars are definitely something to keep in mind for the mid to long run, but we don't really see them weighing on the performance of companies like TSMC or even companies like Nvidia. I think Nvidia has also been very good in terms of management, very disciplined about maneuvering the different kind of restrictions that they've had placed on them in terms of what they can sell to China. I know the semi-cap has also been really good at maneuvering that as well. So we're very bullish on ASML, Lam Research, and AMAT. And all these companies had to also go through hoops to kind of maneuver the US and the Biden administration's restriction on sale of advanced tech to China. So that's something worth keeping in mind. I think earlier this year, we saw a lot of panic buying from Chinese customers out of fear that these basically restrictions would get more strict and definitely more strict if Trump was to win the election. And definitely still strict under Biden. So regardless, there's just a general risk that basically limitations or restrictions to sale of advanced tech to China could become more intense. But I think a lot of that has already been priced into these stocks that have a fundamental position in this market. So the semi-cap names that we discussed, Nvidia, TSMC, so I don't see longer term downside from that into the back end of the year and early next year, unless something extremely substantial happens in terms of policy change. Which, at this point, no one really knows what's going to happen there exactly, but I think TSMC has more working in its favor than against it.
So are you also bullish on SMCI?
Supermicro, that's a good question. We get asked a lot about Supermicro. Yeah. So basically, Supermicro had a great run. Our concern for Supermicro basically was, ahead of their print this quarter, was their gross margins. And indeed, their gross margins really did crash. And we think that's still a risk going forward because basically, Supermicro had that first mover advantage with the AI boom, right? But now, as other Taiwanese ODMs come into the game, they have a lower threshold of maintaining specific margins. So they have they're better positioned to basically gain more business and gain a bigger share of that market, and that could really weigh on Supermicro, or Dell, for example, don't adjust their pricings. And if they adjust the pricing, then they have a problem with top line growth.
So you're a little bit on the fence with SMCI?
Yeah, SMCI and Dell, we're not extremely bullish, especially not heading into second half of the year.
Okay.
I think there's a risk there combined with the product transition. And also, if you take a look at Supermicro's inventory, for example, over the past 4 quarters, you'll notice that they're sitting on more inventory. And a lot of that inventory, in our belief, is H100 inventory. Because a lot of the other end markets have already corrected, and the inventory correction there, basically the inventory correction there already happened. So a lot of the pandemic-led demand and inventory buildup was already kind of resolved. So a lot of that inventory growth, if you check out their balance sheet over the past 4 quarters, can be attributed to the H100. So that's where we confirmed our thesis that there's no more lead times and that double ordering is now kind of eased compared to where it was, let's say, at the start of the year. So they're sitting on the H100 inventory, and at the same time, they have the competition of the Taiwanese ODMs kind of penetrating the market, so I don't think it looks great for them. So yeah, we don't officially cover Supermicro, but we do monitor the entire tech sector very closely, because to be able to cover a company like Nvidia, you really gotta know the ins and outs of where their products are going, and kind of the supply chain in general.
Yeah, I definitely like your approach. I think your research is coming from a pretty unique perspective as far as like what really is involved to drive sales and growth. So I think that's important. The one thing that stands out to me here for SMCI is just a lot of inconsistency. You see, it might be red, it might be green, kind of a cyclical pattern here. Now, my thoughts on Nvidia, I think we are really just seeing pretty interesting price action here. So while both of us are pretty bearish, I actually think Nvidia has formed some type of a bullish breakout here above this red resistance line here. But what I'm noticing here is a lot of an alternating pattern of red and green candles. So one day up, one day down, and this pattern has been repeating since Monday of last week. And we have continued this week, starting off the week with a red candle, a red daily candle. I'm actually expecting some upside tomorrow. I think this pattern will continue. And the date of the earnings announcement is Wednesday. I'm thinking we can see a red day on that earnings date. I think a lot of people are questioning whether Nvidia can continue to put up these pretty insane numbers. Maybe the hype could start to slow down a bit. So Nvidia tends to actually rally ahead of the earnings date. We can see the earnings on the gold vertical lines over here. So we can clearly see a rally before and after the earnings. We see a similar pattern here, rally before and after. Now here we are rallying headed into earnings. I think this one might look different. I wouldn't be surprised if we just start trending down here. We rallied here during a very bullish seasonality trend, so I'm not that surprised about the previous rally, but I think really a lot of the sentiment, I talk to a lot of traders on a frequent basis. A lot of them have concerns about this upcoming earnings. Most of them think that there will be some type of downside, especially with a Fed pivot. The sentiment is actually bearish after the initial pivot. So I think a lot of investors are going to front run that pivot and start shorting and start being bearish really a month before the Fed pivot. So I think really we are getting something very similar to what we've seen in the previous rallies, except this might look different after earnings. We might trend down. If we somehow manage to continue rallying, historically Nvidia has rallied for about 4 weeks after the earnings. We can see a pretty similar pattern. It's a few weeks after the earnings. So if we do manage to get a beat, I can see a couple more weeks of upside before starting to trend down. So I'm prepared for both scenarios here, but I'm leaning towards some downside in September. Yeah, we can see how things are trending, and we could do a follow-up video. But I do want people to check out Tech Stock Pros. So could you please tell them a little bit about where they can find you, what type of services you offer for anyone interested in checking you out?
Of course. I'm excited to give you guys a sneak peek of Tech Stock Pros and Tech Contrarians, our investing group. So this is our public site on Tech Stock Pros. Here you can get access to our ratings and different breakdowns of the companies in our coverage. So essentially, we have this setup on Seeking Alpha, which is a great platform. It's a platform that basically provides market news and analysis on different sectors and different breakdowns, and you have a lot of different great contributors. What we do is we focus on the technology sector in specific, so software, hardware, and semiconductors, and we have over 50 companies within our coverage universe. So we like to not only update our readers on our sentiment on the stock, also explain why we think the way we think and how we got to the investment thesis that we're proposing. And so really the goal here is to make sure that we're providing our readers and our community with an edge to understand the technology market and kind of be better equipped to navigate it. And then for people who are interested in more access to our resources, they join our investing group, which is Tech Contrarians. So this is our investing group, and essentially here subscribers have access to our price alerts, different resources in terms of our worksheets. Earlier in the call, I mentioned our worksheet about how we got to our downgrade on Nvidia. That's paid out pretty well for us, and our full worksheets about calculating inventory levels or the data center sales and kind of pegging them against each other, or Nvidia against Supermicro, Dell, and a lot of other smaller players are all available on our investing group. We have earning updates regularly. We have a pretty lively chat room, and we have deep dives into different economic data and what that means for the tech sector, different opportunities to jump into high quality stocks. For example, we have a breakdown on what happened with CrowdStrike and everything there. And we have a lot more resources, so price alerts, and one-on-one consultations that are available to our subscribers and Tech Contrarians.
I'm glad there's a free trial, so I'll post the links down in the pinned comment section.
Sounds great. Thanks so much, Nader, for having us.
Yeah, thank you for coming on. Thank you for sharing your insights, your quality research, and we'll see how things play out. And I'm happy to have you on in a future video.